Crypto perpetual futures trading. So this is a basic overview. We're going to compare crypto perpetual futures versus a traditional crypto buying, which a lot of our basic app users will be looking at that traditional, but then there's no reason why we can't go through this learning process of trading crypto perpetual futures. So we need to understand the key differences to begin with. So perpetual futures are a derivative, a contract if you like, a trading agreement that allows traders to speculate on the price of a cryptocurrency without owning the underlying asset. So you don't have to own Bitcoin, for example, you're just betting on the direction in which you think it will go. So there's no expiration date for these futures, unlike traditional futures like gold futures and oil futures. There's no expiration date. There's leverage available. So there's also funding rates to balance long and short positions. That sounds a little bit too complicated. It's just a cost that's incurred when you use these types of perpetual futures. So for an example, if you're speculating on Bitcoin price going up or down, you can use perpetual futures. So let's just go a little bit further on. So traditional crypto buying is just basically purchasing and owning the actual cryptocurrency, for example, Bitcoin or Ethereum. The key features here is you own the asset, the digital asset, and it's more of a longer term investment strategy. There's no leverage or funding rates though. So for example, buying one Bitcoin and holding it in a wallet, that's just the basic type of crypto buying. You can't go short. The only way to get out of this particular holding, if you like, is to sell that Bitcoin for either profit or a loss. So key differences then, so perpetual futures, there's no ownership of the asset. Traditional buying is full ownership. You get that leverage with perpetual futures, and there's no leverage with buying. You just have to have the money and you buy it. Perpetual futures have a higher risk due to leverage. Traditional buying of crypto is lower than just using perpetual futures, but there's still a risk with anything that you buy. So really perpetual futures are short-term speculation. So this is brilliant when using the Expert AI app, because sometimes we're in a position for say 2 or 3 hours, maybe 12 hours, maybe 2 days. But really traditional buying is a long-term where you just buy a Bitcoin and you forget about it for 10 years. Cost-wise, there's probably just the transaction fees with buying the traditional way of just buying crypto, but then you've got funding rate and trading fees with perpetual futures. So pros and cons. Perpetual futures leverage amplifies potential gains, so and you have the ability to short as well, and there's no need to own the asset. Cons, it's high risk. There are funding rates, so there's a cost, and there's potential for liquidation if you don't follow good risk management rules, like putting a stop loss there or even adjusting stops as the Expert AI app tells you to do to lock in profit. Traditional buying, the pros is ownership, it's lower risk, it's long-term growth potential, but you've got to hold it for quite a while. Cons, there's no leverage and it's limited to the price appreciation. So you go into something like Doge, you buy $1,000 worth, it may go up 5% in 6 months, and that 5% only equates to $50, whereas if you're using perpetual futures and you're doing it short term, you gain a lot more, and we're going to go through that in future videos in this series. So which is right for you really? So perpetual futures suitable for experienced traders, requires risk management, as I mentioned before, and understanding of leverage. And again, we're going to do some series of videos to help you understand that and teach you how to understand everything to do with perpetual futures. It requires some education and practice, and this is why this is the first video, and while we're putting these series of videos together to take you from basic crypto buying to using perpetual futures, if that's the course you want to take. And again, traditional buying is ideal for beginners and long-term investors. It's simpler and less risky. So next up, we're going to look at setting up a crypto perpetual futures account in the next video.